This is going to be the only volume profile video that you're ever going to need. So bookmark it because you're going to want to watch it again and again because this is literally going to cover all of it. Let's even talk about why this is even remotely important, right? Knowing what the volume profile is. So I've been you staring at a chart, not knowing what levels are important, or doing your top-down analysis and you end up with 20 different levels, not knowing which one to use. You've tried and always seen the volume by time, the ones on the bottom, and it just has no real edge. You're marking out the fair value gaps, every single one you see, but price keeps blowing past them, and then you get confused because you see a fair value gap on the 5-minute, but it's not there on the 3-minute or the 15-minute, and price doesn't respect any of them. And when you end up with 20 different lines on your chart, all these different levels, and price just keeps moving through them, and you freeze, you don't know which ones to use. And I understand that. I've been there. That was me. I've been in your shoes. It's completely normal. But that wasn't until I understood the volume profile. Nothing changed until I learned how to use the volume profile. Once I did that, everything clicked. It all just made sense. The levels, the fair value gaps, all of it, it just made sense. I didn't have to guess. I didn't freeze. I just knew exactly where I needed to place my trades. So first of all, what is a volume profile? So for reference, I'm going to pull one up right now and we're going to talk about it. So here's my volume profile, and no, it's not just a histogram on the side of your chart, and it shows you where institutional activity happened, not when. And so you've probably seen a couple people talk about the different types of volume profiles, mostly like the fixed range, the session, and the visible range, right? Those are the three most popular ones. So essentially a fixed range is when you would take your mouse and you would draw out a certain part of the chart, let's say from here to here, and that's where you wanted to see the volume. That would be fixed range because it's fixed. You choose where you want to see, right? The session volume profile would be something that looks more like this, okay? It would be something more like from the start of the session, the Globex, for example, or even better example, let's go back and look at this. 8:30 a.m. here, 3 p.m. or 4 p.m. here, right? So that would be a session. This is a session profile. It's showing the New York session only. And then you could have a visible range. I don't have one on here, but it would only just be what you're looking at. So it would only show you the volume profile for only what you can see in front of you, nothing more. Now, let's move on to what the three most important parts of this volume profile are, right? That is the value area high, the POC, and the value area low. So to make this as simple as possible, let's just draw it out. So here is going to be our volume profile. I'm going to do this in blue. So we'll have essentially what you saw. This is like the volume by price, not the volume by time. Volume by time would be down here at the bottom. Volume by price is on the side because it's showing you as price moved throughout the chart, how much volume was conducted at each little price point, right? So for example, at 74.0775 is showing you that there was a lot of volume here. So at that specific price point, that's where a lot of volume was executed. So you can see where a lot of volume was executed and where it wasn't, right? You can see where there was little volume executed. But the three most important parts are the POC. Let's actually do this in a different color. The POC, the volume point of control, okay? Or you'll just hear it as the point of control. That is where the most amount of volume was traded in the session. So throughout your entire volume profile, whatever it may be, if it's a session or fixed range or visible range, like the three we talked about, this is going to be where the most amount of orders was executed at whatever price it may be, right? If it's the higher one, up or down or wherever it may be, this is just happens to be where it was at. This is an important key level. It's showing you where most of the action was done. The next one we're going to do is the value area high. Okay. So the way that these work is that the value area is 70% of the volume that was traded. Value area high, which is that's what we'll put here. Once again, the value area, right, is where 70% of the volume was conducted. So 70% is going to be just inside of this large chunk here, right? So that's where most of the volume was conducted. 70% is most of it. And then anything outside of it is really just not big enough to have made that cut into the 70%. So it's just showing you like the distribution of where the volume was conducted, right? So these are the three most important levels. And just in plain English, right? The POC is where the most volume was conducted, and then the value area high and low is just showing you the edges of value where the edges of the most amount of volume was traded, right? So where like the important people are conducting business and just where everyone is hanging out. Where is the volume being traded throughout the session and throughout the profile? Okay, so let's get into the next topic, right? And it's how to read each of these levels. So a high volume node is, well, before I talk about the high volume node and low volume nodes, let's take a look at some examples and let me explain it in plain English, right? So let's put our blue back, right? And so we've got a high volume node and a low volume node. Okay, so for example, this right here is a large area. So we're going to talk about them like in plain English, right? So like peaks and valleys. That's what we'll talk about, like mountains and valleys, okay? So these would be the mountains, right? So these are high volume nodes. So each of these are going to be nodes, and these are high volume nodes. High volume node, right? And then high volume node, right? Let's just peek over at the chart, and we're going to see this would be an example right here of a high volume node. Also, this one right here would be a high volume node, okay? Now, here is an example of a low volume node, okay? These are also very important, especially to me. The low volume node is where there was little to no volume conducted, right? So the high volume nodes are a lot of volume, and the low volume nodes is very little volume. Let's look at an example in the chart of a low volume node, okay? Let's see what that looks like. So we've got here, this little area would be a low volume node. So as price was moving really fast, it was having no contradicting orders. So the sellers were in control and there was no auction happening, right? So the sellers just were able to get the price to move down quickly with no arguments about it. Same up here. Here's another one, low volume node. Nobody was arguing with them. Price was coming up. The buyers were in control. And then the sellers flipped and there was just really no arguments. There was no auction happening there. So these are going to be another two really important types of levels, okay? So this is what we're going to do. We're going to write out the types of levels, right? So number one would be the POC. Number two would be the value area high. Number three would be the value area low. Number four would be the high volume node. Number five would be the low volume node, okay? So now we've got some important levels. So now you don't have to guess based on liquidity of what you think is liquidity or just based on a top-down analysis. Like here now we have our main levels. This is what's important, okay? So now I'm going to go over a couple ways that I use some of these levels. So for the POC, this is an important one to me. So let's go ahead and draw this out, right? Let's say this is the POC, right? This is obviously where the most amount of volume was traded on my drawing here. So this would make it the POC, the point of control, okay? So one of my rules is that I will only take shorts above the POC. So I will only short above the POC, and I will only take longs. Actually do this in green. I will only take longs below the POC, right? And so this is just giving me a better chance at getting a good risk to reward ratio. And it's also giving me an opportunity to buy in premium and discount, right? So if you're going to buy a car, you're not going to buy when it's most expensive. You're not going to buy a car whenever price is up here, right? You want to wait till the price of the car comes down. You want to wait till it ages. It gets a little cheaper. So you're going to wait until the price comes down. So you're going to wait till price comes down, and that's when you're going to buy. So right here is where you would want to buy, right? Same idea on the other side. If you have something in your garage and you want to sell it, you want to wait until that particular item is more valuable. Okay. So you don't want to sell it when it's most cheapest, right? You want to wait. So for example, if you have a collector's item, you don't want to sell that collector's item right after they made it because there's a bunch of them in circulation. Like if it's some toy and there's a ton of them in circulation, everyone's got the toy, they're not that valuable. But you wait a couple years and they're hard to find, that's when you sell, right? So you want to sell when the price, when the value is highest. So that's just premium and discount, right? So the premium is up here and the discount is down here. So you're getting the car on discount, you're selling your toy for a premium, selling above the POC, buying and getting longs below the POC, just getting better value. Okay. So now I also want to talk about the low volume nodes because those are super important to me, right? So we can use these as areas to look for support. So if price, you can use these like as setups. So one of the ways that I will see them, this is the real way to see a fair value gap, right? So if you see price move through here quickly, price will want to come back and retest it. You can get short here and then catch the move lower, right? So you'll see that the people who created the low volume node who had control of the market, in this example, the sellers had control of the market, right? If the sellers had control of this market, they're going to want to hold the market down. So when the buyers try to step in and see if they can get this thing higher, guess who's going to take over? The sellers, right? And so that's where we can get short right here. So there's one of the ways, just kind of a basic idea of how you can use the low volume node is seeing some type of institutional control and then defense, right? They want to defend this area. They want to defend the area they created and controlled. Okay. And then you can also see, you know, for a time, something for another video, you can see some delta outliers in that area too. Okay. But that's for another video, more or less like a strategy video. So let's go ahead and look at this now, right? So let's talk about the directional bias filter that I have. So in this particular example, I really don't think I would long or short anything because it's on top of the POC. So I'm not getting good value, right? But let's say, for example, if price were to shoot up here, I would be looking for a short opportunity. Okay. And if this thing was to dump down and come try this low volume node right here, that would be an area where I could look for longs. See some type of defense of this, almost like this retest. And then the buyers who created this low volume node came in to defend it here. Right. So kind of just the basic idea of putting it all together. And then you can kind of, so you use the low volume node as like an area or a level, and then you would use the directional bias, the POC. So you're below the POC for longs, plus you've got this low volume node down here. You want to see the buyers defend. So if this thing was to come down, retest this, you'd be able to catch a move higher. So you've got two confluences there, and that's kind of how you would put it all together. And then you would use the order flow also, like the book map and the deltas, to kind of get some extra confirmation. But again, that's like more of a strategy video rather than anything else. So let's go over this screenshot right here. Here's an example, and it's really messy here, right? But number one, we've got this low volume node. This is number one. And then number two, we also had the VWAP coming inside of the low volume node. So this is one of my most popular setups that I take. It's called the kill box. It's the overnight low volume node plus VWAP, right? So we had VWAP aligning inside of the overnight low volume node. And I know I'm going off here, but I want to show you just kind of how you can put all this together to create a strategy, right? So you've got the low volume node as a key level. And then you also have VWAP, which is pretty popular, and it can work as a great confluence. And so you would see the sellers are the ones who created this move lower, and then price came back up to retest it. And guess who was there to meet them? It was the sellers. The sellers were in control of this low volume node. And then you were also above the POC, above POC for shorts, right? So you would execute a short here, You'd also see some order flow confirmation, and then you would be able to catch this massive move lower down to the other side of value, meaning the value area low from the value area high, And so even here, I was able to get short above the value area high, which is even better. So not only above the POC, but you're also able to get short above the value area high. So that's even better, right? You're getting even better risk to reward for that setup. Here is another example. Okay, we've got another low volume node. Who created it? The sellers did, right? And so then you see the sellers come back up to retest it. And they did right here. We're also above the POC. And what do you think happened? The sellers took control. We had great risk to reward because we were in premium. So we were selling the thing when it was more expensive above the POC. We were able to catch this thing lower. So that's another example of how you could use one of the key levels like the low volume node, right? And you could also see that we were building a high volume node here and then broke out of it. So that's another great, kind of idea is that you can wait until price breaks out of a high volume node. Here's one more example. These are all screenshots from my playbooks. So here is a low volume node that was created. Now I didn't include the volume profile in this one, but just an example of how you can use them, right? You got one rejection here with a move lower. You got two rejections here with a move lower. And then I believe this particular setup did it again for a third time. But regardless, you've got two great opportunities here to use these low volume nodes, high volume nodes, etc., as great key levels in your trading. So really, and as far as this stuff on the side here too, this will be for another video. That's that delta thing that I was talking about. So as of right now, that is not relevant as far as learning the volume profile. It's just another cool thing to have on your chart. But just to recap, right? We've got the value area high, the POC, and the value area low. POC was where the most amount of volume was traded. It shows acceptance at that area. It shows that they are fine. The buyers and sellers are fine with that price. It's acceptance, really. And then the value area high and low is just showing you on the session on your profile where was 70% of all volume traded. So it's showing you that just in this area right here was 70%. Okay, so anything past this would be like 75, right? Or not 75, 30. So it would show you like the other 30% of volume. Same here, the other 30. So all of this here was just the other 30% and then the other 30%. Okay, so these candles down here. So really that's how the value area works. And then you also have the two other things. You've got high volume nodes here and here. It's just showing you areas where there was a lot of orders being contracted, right? There was a lot of bidding and a lot of auctioning going on, a lot of buying and selling. And then the opposite is true here, low volume nodes where very little auctioning, very little contracting was going on. Not as many people were executing orders in these areas, right? And they had no arguments about it. So when price is here, you've got this high volume node building, right? Here and here. It's showing you that there's buyers and sellers battling it out. But if you look at an area like this, it's showing you the buyers and sellers were not battling it out. In fact, the buyers just won. No one argued with the buyers. That's really it. I mean, don't overcomplicate the volume profile. That's all that it's showing you. And then from these 5 levels, you can derive plenty of strategies, and there's some pretty good ones. I've got a couple really cool models in my playbook, and those will be for future videos. These are things that I trade on a daily basis, but these are the most important things that you can get out of this video are these 5 pieces, and you can use these as your levels. So instead of having 20 freaking levels on your chart, you just have these 5. These are the most important things. And I'll also add, when you get a little more advanced into it, you can also look at previous day levels of each of these 5 things. So previous day POC or previous day low volume nodes, those can also be really great pieces as well. So if you are curious about some of the setups that I was talking about in my playbook. I mentioned the playbook a few times, or the models. I have a lot of this stuff completely for free that you can look at. Once you start understanding the volume profile, you can start to understand the models that I trade, because I try to keep it as simple as possible. I post all of that stuff in my free Discord. There is a link in this description. You literally just click the link, you put your email in, and then it gives you access to the Discord. So if you want the full system and the models and the playbooks that I trade, I have posted them in that Discord in the free resources channel. And plus, I'm in that Discord, so you can ask me questions about it whenever you want. And if you are interested in learning more about the Delta stuff, or my models, or more about the volume profile, or just anything order flow related, subscribe to me. It costs you nothing, and you're going to see my videos pop up. I've already posted great videos, and I'm going to continue to post even better ones. And the more you guys request specific videos, I'll post them. So subscribe to me so that you don't lose my channel, and you will be able to find my videos much easier. And you're going to see all the really cool content coming out, because there is a lot to learn with order flow. Anyway, that's it. Thank you for watching.